Welcome to the In Early podcast, where I speak to those at the forefront of the digital assets and technology sectors, telling real-life stories, considering the growth and growing pains of the industry, and exploring how blockchain and other technology has made an impact on people's lives. My name is Matt Green, and I head up blockchain, digital assets, and technology disputes at law firm Lawrence Stevens. This week, I speak to Ismael Dainehine about his enterprise EverGive. Designed as a means to donate Bitcoin to charities, Ismael believes building and storing reserves really is the long-term solution to charitable giving. I hope you enjoy. Ismael, welcome.
Thanks for having me, Matt.
Tell us a little bit about your background. There's Givematch, there's Shamaazi,
Shamaazi.
I keep getting it wrong.
Yeah, so for the last decade, I've been spending a lot of time in tech for good. And what that's meant is building out a number of products under Shamaazi, like Givematch, where we not only raise funds for charities, but we really try to take a first principles approach and think about from first principles, what is actually broken here, what we're actually trying to solve, and really challenge the charity sector to level up.
And what does that mean?
So, if I take, for example, EverGive, which I'm sure we're going to come on to, it's really trying to look at things, all the products that we build it through a lens of if the current system is broken, which we do think it is broken in the philanthropic system as well as like the monetary system. If it's broken, then what does it look like from first principles to rebuild it?
Okay, let's move to that, because EverGive, right? There's clearly a problem that you've identified with charity, that you just said. And clearly you've come up with what you believe to be a solution. So what is the problem with the way that we donate to charity in the usual way, and then what solution have you found?
Well, the problem in a nutshell really is that charity today is stuck in a short-term loop. What that means is donors are giving and charities are fundraising, they're spending those donations, and the next year they're doing the same again. And the donors are exhausted, the charities are exhausted, but then there's just this guilt machine that's driving them to keep going. So the solution that we've identified is to move away from one-off donations to a perpetual financial engine that keeps donations and impact going. And so what that looks like for us in EverGive is a endowment-like structure where the principle is intact and the proceeds or the profits from those from that principle, from the investment, get made out to charities not only once but forever. So then thereby the charity now has like a sturdier financial backbone that makes them resilient to all sorts of changes, whether that's political, donor fatigue, economic shocks. They are finally put on the path of financial security.
So those three things that you've just listed, they are some of the problems that charities have to deal with. I mean, when you give to charity, one of the things I do is donate in Kenya to a school, and they're always asking for donations. And there always seems to be this perpetual wheel of they get donations in and it immediately goes out, and they keep asking for more. Yeah. And I guess the language you used was fatigue. I guess that's one of the main problems.
Yeah, absolutely. And I think the charity sector is really suffering from that. And donors are suffering from that, and there needs to be a solution. But I think anecdotally, from the donors that we've spoken to and the ones we've got over 20,000 users on our platform now, they really feel very refreshed by the idea that even though their giving might stop, their impact doesn't.
So why would people give to EverGive, your outfit, as opposed to directly to their charity of their choice?
Well, donors give to EverGive because they don't want their impact on the world to ever die, basically.
That's the pitch.
Yeah, that's the pitch. If you're concerned with having an impact or making a change on the world, are alive to the idea of building a legacy and creating change that outlives you, then EverGive is the place. So the way that we put it is, if you're thinking about change that lasts forever, EverGive is the place. If you're thinking about change that lasts less than forever, then you have loads. Then you have loads of other options.
Okay, so this is almost like a journey, a sort of change of frame of mind to make sure that people don't donate their £10 every month directly to the charity because for you, that goes straight out the door.
Correct.
And it probably goes straight out the door to a good place, but it may also go to things like, keeping the business alive and wages, etc.
Correct.
And your view is there's got to be a more sensible way to keep wealth within so that these donations can be made in a more long-term way. So my question to you is how does this work? I mean, I checked out your website, and under how it works, your website says, and I quote, under how it works, when you donate through EverGive, one, your donation goes directly to a donor-advised fund, DAF, partner, an independent organisation that manages and distributes charitable funds. Two, the DAF uses donations to buy Bitcoin and holds them securely. And three, charities receive grants based on fund performance and the DAF's allocation strategy. EverGive does not hold, in bold, invest or control your donation. We simply provide the platform that makes this possible, end quote. A couple of things here. So who are your donor-advised fund partners, your DAFs?
I'll come on to that. Can I just comment on something that you said, which was quite interesting earlier? It's what we're trying to educate donors to arrive at is that we don't think that they're mutually exclusive, where it's giving for the long term or through an endowment-like structure, or giving for like humanitarian relief today. We think of it more as like a cohesive portfolio strategy where you're giving a percentage to the here and now, and you're giving a percentage to really solve like kind of the sustainability of the mission that you're supporting.
It's almost like having a wealth manager.
Correct. And I think that technology of wealth management really isn't in the charity lexicon at all.
I'm not going to read all that out again because I'm not. It was quite.
Yeah, long. No. I get it. No, I got the question.
It's an important point, but to what extent? Like, who are your donor advised fund partners?
So the donor advised fund is essentially, you can think of it very simply as an escrow between the donor and the end recipient.
Being the charity.
Being the beneficiary. Being the charity in this case, correct. And they're a regulated third-party independent body that removes us from the money flow, and so we never touch the public funds at all.
So you're the shop front window where people can go, I want to give money, and then they will be the recipients.
Yeah, correct. So your money will go directly to this kind of regulated donor-advised fund. So their goal is really to make sure that the donation from the public is spent in line with charitable law and financial regulation. So although your intent is primary, they just make sure that the compliance-wise will make sure that the donation is always spent or is never misused.
Okay, and they are regulated as a charity?
Yeah, they're a registered charity, so they'll be under the Charity Commission.
And they have all the licenses, are supposed to be an escrow provider, etc.
Yeah, correct.
And they take a fee for that?
Correct,
assuming.
they do.
Okay.
They do.
And you note that, to quote again from your website, the DAF makes every effort to honour donor recommendations when distributing grants.
Yeah.
While the final decision rests with the DAF, to ensure compliance with charitable and financial regulations, our goal, it says, is to direct funds in alignment with your chosen causes wherever possible. So tell us how this works.
So say Matt wants to make a donation of £100 to RSPCA. RSPCA is a pretty safe charity, but assume that circumstances changed and all of a sudden, compliance-wise, it's not in the best kind of charitable interest of the public for those funds to go to said charity. Then the DAF will inform you and tell you that your donation cannot be awarded or dispensed to such a charity. Where would you like it to go alternatively? So that's how they protect kind of the donor's kind of interest.
Okay, so they may say you want RSPCA, but for whatever reason that's not available. How about another similar charity?
Yeah, or like they're no longer in good standing with the Charity Commission, and so it's not a safe place to put your money. 99.9% of the time, the donor advised fund will honour the intent. Very, very rarely, and it's usually because a charity has been struck off, or all of a sudden there's some kind of nefarious issue.
And does the DAF partner with endless charities, or do they have a select number?
Yeah, well, it depends on the mandate of the donor advised fund, DAF for short. Our DAF that we partner up with have a mandate to work with any of the registered charities in the country, in the UK. But there are certain DAFs that restrict their kind of mandate to kind of children's charities, etc.
Okay. And what role does Bitcoin play in all of this? Because this is the difference, right? Instead of just money going out the door and it just being a cash handout, this is all built upon Bitcoin. So tell us what role that plays in all of this.
Yeah, so we arrived at Bitcoin through a lot of discovery. So we were trying to solve a genuine problem, which is how do we make Matt's donation of £100 actually last forever? So we went through all the different investment kind of strategies. My co-founder, Mohammed Yeshelhaq, he's a hedge fund manager with his own kind of family office and digital assets now. But traditionally, just in the very conventional space, when you're trying to create a forever fund, you have very different criteria to measure kind of success by compared to a hedge fund that might be looking for returns in 10 years or 15 years, etc. So when you're looking at impact that you want to be around in 500 years, all of a sudden a lot of companies are eliminated. The majority of the companies that were valuable in like the 80s no longer exist, for example. So over a 500-year period, we were looking at things like real estate or gold. And then we just realized with real estate, we eliminated it very quickly because there's counterparty risk. Who knows who's going to own Belgravia in 50 years' time or 100 years' time. And we thought that if we were going to dump $1 billion into Belgravia, it's probably going to be bad for everybody else in terms of like the inflation. We were, by process of elimination, we were left with like the only kind of like hard sound money kind of asset and technology that will actually deliver the promise that we're making to our donors, which is making their money last forever. So gold was eliminated because over time at scale, the custody fees were just becoming impractical for us, like on our modeling. So even gold didn't stand kind of the test of the criteria that we laid out. Bitcoin, by elimination, was the only one that we felt could solve that problem of how do we make the store of value actually last forever in a very practical way.
That wasn't too expensive. That was affordable.
Yeah,
so
exactly. That was saleable over like time and space, all of these things.
But that's a lot of trust in the Bitcoin network.
Yeah, we've taken that orange. We swallowed it hard.
I suppose if the large banks and investment houses are chucking money at it, you thought, you know what?
That was the real reason.
Yeah. The idea is then that if my £10 is essentially buying RSPCA with Bitcoin, then at some point, once their reserves of Bitcoin, because essentially that's what you're creating a reserve for them. Yeah. They can then use that as collateral for whatever they need to do. That's the idea.
Yeah, they can borrow against it, etc.
So the DAF holds the Bitcoin?
Correct. So to begin with, we make it very clear that our end goal is for the Bitcoin to live on the treasury of the charity. So we don't consistent with kind of the Bitcoin doctrine, like we believe very much in kind of decentralization, right? So we don't want old dependencies of charities that they have to become a new dependency on us, right? So we have like a roadmap for charities where in this early kind of phase of Bitcoin, we will help them build the reserve and we'll kind of manage it and custody it for them through the DAF. But as soon as they are ready to custody it themselves, will be kind of their biggest advocates.
So does the DAF hold Bitcoin on trust for...
Correct.
Okay, and the charities, I suppose, have to sign up and agree that they are going to be the beneficiary of a trust holding Bitcoin.
Exactly, and when we kind of off-ramp the Bitcoin onto their wallet...
when the day comes.
Yeah, when the day comes, the charity would need to like kind of constitutionally agree to the donor's intent, which is, I don't want you to sell this principal, I want this impact to last forever, so don't just basically buy fiat with it.
Don't just trade it out.
Yeah.
But in that respect, so I might have £10 every month and I may go, I want you to, when you get the Bitcoin, I want you to sell it because it's going to be worth more. And you may go, I'll give you £10 each time and I never want you to sell it. How does that marry up?
So we appreciate that there will be a point in time when holding the Bitcoin might not make sense for absolute ever, where kind of the returns are maybe like 2% a year, like when it's really hyper Bitcoinized. But for the foreseeable future, in the next kind of 10 years, possibly even 20 years, we've got like a very definitive hodl strategy. And then what the world looks like at that point, like we'll figure it out
later. Yeah. I guess this all is based upon the idea that Bitcoin's going to go up. I mean, it has, but the idea is it's going to be increasing forever.
Yes. I mean, We definitely think that Bitcoin is kind of the hardest form and most perfect form of money, and is deflationary and will continue to go up relative to kind of the fiat kind of currencies. But the more that we learnt about Bitcoin, the more we realized that it's actually freedom money as well. So freedom technology in a way that people around the world, all of us really, but particularly in the global south, can use it as a peaceful revolution to opt out of a system that really wasn't designed to uplift them.
The unbanked, etc.
Yeah, the unbanked, the underbanked, the oppressively banked, all the above.
Yeah. So actually, I moved away from some of the questions out of the paper there, so I'm going to go back to it. How do you stop then donations getting into the wrong hands, for instance, sanctioned parties?
I mean, that's where the DAF really comes in, and it was why it was really important to us to bring in the experts who are not us in terms of compliance and governance. So the DAF have a very kind of robust kind of governance infrastructure to make sure that your money always lands in places which are kind of lawful, compliant, and moral as well.
And under the transparency and security bit of your website, it says, quote, "We believe in clear ethical business practices. The DAF is independently audited to ensure responsible fund management. A third-party custodian safeguards all Bitcoin holdings." I should have said that before I asked you the question.
Yeah.
He does it. "And we provide regular updates on how donations are distributed." Tell us about the auditing. How does that all work?
So the DAF is audited by Charity Commission. So then they have like a thorough audit every year to make sure that they're doing what they're telling the public they're doing. And in terms of the actual Bitcoin holdings, we make available the wallet of the Bitcoin holdings, so people can see at any point in time what the purchases are, like how much has been like deducted of anything, how much has been added. And we also have sub-wallets for the various charities. So RSPCA can see their sub-wallet within kind of the macro wallet.
Their particular address will have a balance.
Exactly.
So who are your custodians?
On-ramp.
Okay, and why did you choose them?
Firstly, it was a journey for us, if I'm honest, in picking like what kind of custody kind of structure that we wanted to have. And then multi-institution custody just seemed to be the most sensible one for this asset. And you've seen, I guess, the blunders in the FTXs and recently Coinbase and the hacks that have taken place. So multi-institution custody was made a lot of sense. And then we were introduced by Haris Irfan, who's kind of fairly prominent on the Bitcoin kind of circuit. He introduced us to On-Ramp, and we just felt that they were just so mission aligned and so principled and really believed in what we were doing.
Okay, so the DAF works with the custodian, right?
Correct.
They are in tandem.
Correct.
Because in theory, what could happen is the DAF could do all that they could, but then the custodian, if not regulated or aligned with what you're thinking, could just take all the money and disappear.
Yeah, because the way that the multi-institution custody works, it's near impossible for that to happen because the way that it works is there are 3 different custodians spread geographically across different continents. And the keys spread across those 3. So it would take 2 of the 3 to collude and be evil at the same time for that to happen. That's why we felt that was another level of security that would reassure our donors.
Okay, and how do you guys, as EverGive, make money?
So we are a business. EverGive is a business.
You're not a charity, are you?
We're not.
Charity.
Yeah, we're not. So the donor advised fund that holds all of the public Bitcoin is a registered charity. So we make money when Bitcoin appreciates. So we don't take anything off the principal donation. 100% of the donations from the public goes to the DAF and to the Bitcoin. And if Bitcoin appreciates, it seems like you're skeptical, but
I'm hoping it does. Yeah. I'm hoping it's my benefit.
Yeah. If Bitcoin appreciates, we get a percentage of that appreciation. If it doesn't, then we die on that hill, like you.
Okay, so you're at risk.
Yeah, we are at risk.
And if it goes up, how are you claiming some of that money? Does the DAF then reimburse you?
Yeah, correct. So the DAF would reimburse us X%.
Well, the custodian would have to give the money to the DAF, and then the DAF would have to do it because I suppose the money's gone up.
Yeah, right? Correct. So then the DAF would have to instruct the custodian to move X amount of Bitcoin.
What percentage it is that your commission is?
So at the moment we're looking at 15% to 20% max.
Is that like every year, every time you're audited, it's like, what? Then this year the increase was X?
No. So it's a one-off. So as soon as Bitcoin appreciates by say 20%, then that's a one-off fee, and we don't charge on it again.
So it has to get to a certain percentage for you to be paid.
Correct.
So it could be years, but you hope not.
Yeah, exactly. Yeah, we are at risk.
And
very exposed.
And if it goes down,
yeah, then we're even at more risk.
So let's just think, if it's 20% and you get paid, it could flit around the 19.5% for ages, and you're like, come on.
Yeah, exactly.
And I suppose everybody wants it to.
Yeah, absolutely. Okay. It's definitely this product has definitely been built by people who are kind of hyper bullish on Bitcoin for sure.
And how long has it been going for, this business?
January this year, so not very long.
Okay.
So we've experienced like really fast adoption from the public, with over, I think, almost 30,000 users on our platform. The majority of them being kind of single one-off donations, and about 20-25% of them being subscribers every month to the reserve.
How do you market?
So because we've been in the space for such a long time,
with the previous businesses,
we had initially just sent out. We basically leveraged those products to bring awareness to EverGive, and adoption was just fairly seamless from there. So we haven't actually marketed yet.
Okay, that's quite interesting. I mean, let's just play it through then. I make a donation. I want to give it to an animal charity. WWF.
Yeah.
Not E, obviously, to receive Bitcoin through you. Does that animal charity it doesn't have to have the infrastructure then, does it? Because the custodian does, and I guess the custodian would then, with the charity having already agreed to be the beneficiary of this trust, and the Bitcoin being held on custody, I suppose the charity just waits. So my money, I can see it go to your DAF. The DAF then does the DAF buy Bitcoin with it then?
Correct.
And then the Bitcoin is then stored with your custodian.
Correct.
And then the charity can see on its address openly, because it's open, how much they've got.
That's exactly it.
Okay, very interesting.
And so we've basically abstracted all of the complexity away from the charity and taken it on ourselves.
And we touched on this before. You're a registered company. Why are you not? And I scrolled through your website to see, why are you not a charity?
It's an interesting question. We just want to build great products, and we want to provide and add value to our users, whether that's donors, charities, etc. We weren't too precious about the vehicle within which to do it in, and we just felt the quickest way for us to do it, or the most effective way to do it, was through a company and not through a charity. And we felt that
a lot of profit.
Yeah, correct.
Just slowly.
Yeah, exactly. And we need to, there's expenses that need to be paid. Investors, we're going to need investment soon, I guess, to expand in the way that we want to expand. And so the model of a kind of charitable entity just doesn't work for us. And we felt a lot of it, I think a lot of people use a charitable vehicle to build things out because it's almost like the brand and halo effect it gives you, rather than it actually being the best decision for the business. And so so
it's a branding thing more than a business decision sometimes.
Exactly.
And one of the other questions that I had when you were talking was, the charities that you choose, you have to have an agreement with them, of course, or I suppose either you do or the DAF does. Is it just charities limited to the UK? And what happens if, and I'm playing devil's advocate here, some charities can get set up to then funnel money in nefarious places. What safeguards have you got to stop that happening? So
we are predominantly UK based at the moment, although we have begun kind of adoption in the US and Canada. So I essentially the DAF really plays a big role there, and and this is why we didn't want to do it. There's a number of different charitable platforms out there that don't use a DAF because it adds expenses and costs. But this is where we really felt the protection of a kind of regulator really covers us and allows us to just stay focused on building product. So it would really be the DAF's job to make sure that kind of the nefarious actors don't receive money from us.
So you're the shop window, goes to the DAF, and they make the financial decisions ultimately.
Yeah, absolutely. And they carry the risk.
Right. Because I guess in theory what you could do is, And whenever people hear about crypto or Bitcoin and invest, they sort of think, okay, well, there must be some scams. My dad listens to this, and he normally asks me these questions like, what happens if? So I'm channeling my dad here.
Yeah.
So in the event that one of the charities ends up being something nefarious, it ends up being some big laundering operation.
Yeah.
That would actually, the liability would fall on the DAF and not the relevant KYC.
It would mean that the DAF has not done its job.
Can you tell us who the DAF is?
Yeah, so in the UK, it's called the Forever Trust.
Okay.
And in the US, it's Myriad USA. Okay. And in Canada, it's Myriad Canada.
And they are all registered with their respective
charity commissions.
Very good. Okay. And last question for you. What other charity, or maybe the question is, the answer is there aren't any. What other charities are you excited about, or what charitable projects are you excited about that involve crypto assets and Bitcoin, etc.?
I think there's just so many at the moment that I leave some of these calls just super, super like energized and inspired. One at the moment is Article 19, a really small operation in Mexico, where they are being kind of they help human rights activists and defenders in Mexico who are being kind of sniped down, debanked, imprisoned, and they support the wives of these kind of human rights defenders.
And that's through cryptocurrencies?
And because they're debanked, like the only way to get money to them is through Bitcoin. Amnesty International is another one who I've got a lot of respect for, and some of their leadership just leaves you just feeling very humbled. Like absolute superheroes.
What do they do in the world of crypto that or maybe they don't, maybe just the general things that they do impress you?
So with Amnesty, I think they're very switched on about the kind of the macroeconomic climate and how money is used to, well, this particular chapter of Amnesty at least, how money is used to control and manipulate and subjugate. And just having those kind of conversations with a very kind of switched on charity, given our mission, is just really, really refreshing and just makes me hopeful.
Excellent. Well, thank you for coming down.
Thank you very much, Matt. Pleasure.